This is our Forex blog for March 29th, 2012. And like we do most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. We statistically compare each currency to every other one using multiple time frames. The top one is pretty much a bar-by-bar statistical strength. It's made up of 5 of our best tools. 3 of them measure the direction. In this case, the dollar's moving versus all the rest. 1 of them measure the intensity on a bar-by-bar basis. Did it move 150% more than it normally does at this time of the day? And the last one measures the intensity over the last 30 or 45 minutes, and we average those together in a very easy to read format. Anything at and above the 80 level, and if it's green, it's strong. If it's red, it's weak. Underneath that, we have the daily trend, weekly trend, and monthly trend. So ideally, when you have the Australian on the bottom, it's weak on all the longer time frames, and when you see it at 4:30 right here, some weakness, you want to sell it. Again, right here, maybe right here. Same thing with the New Zealand. If you see a currency like the pound that has a lot of strength today, and most of the longer time frame trends are up, those are the ones that you want to be buying. Now, I don't typically leave the pound Australian chart up, so I'm going to bring that up right here. But when you have a strong pound and a weak Australian on all the time frames, it's usually a good idea to be looking for buys. And we have really a couple different ways of buying. Here we have earlier in the day, these are the trades that I would have considered taking myself. Most of the time I trade US sessions, so I wasn't trading earlier in the day. This breakout right here, obviously it went up about 20 pips. I might have bought this next little pullback right here, which unfortunately didn't move very far. It went up about 15 pips. Anytime a currency returns to where the previous swing high is, you have to assume that it's not going to break through there. So if it goes up there and goes sideways, you might want to exit half your trade, move your stop to break even. You would have had a small win here. And once it breaks down underneath and makes a lower low, it's not necessarily a good idea to be looking for buys. At 4 o'clock right here, you can see, or coming up from 2 to 4, the Australian had some strength, but it also was lessening over time. From about 3:30 to about 4:15, you can see it was lessening. Let's take a look at the pound itself. This one had a little bit of weakness, and coming up to 4, you can see some strength coming back in. So because of that, and because the time frames of the pound were all up and the Australian were all down, you might want to be looking to buy this. And you can see it made a higher high. That's always a positive thing. You can, as this thing starts going up and goes sideways right here, draw your fibs on this. That's usually where the market's going to stall, and it did. You would have been in this last trade right here at 38, maybe out of this trade somewhere right here when it started coming back down at 73. So that's over a 40 pip win. And whenever it does make a big move like that, draw your fibs. Most of the time, if it's really strong, it's going to pull back 38 to 50%. In this case, it pulled back to the 62%, kind of went sideways right there and broke out. I would have probably bought it right here, put my stop underneath the low, and unfortunately had a loss. Myself, whenever I take a trade that causes a loss, I'm a little bit more careful to get back in. And because once the currency breaks the 62% fib, that's a sign of weakness. So I wouldn't necessarily have bought this right here, even though it did go up and would have worked. Kind of chopped around here and went sideways. I would have probably bought this breakout right here. And unfortunately, that trade looked like it would have also stopped me out with a loss. And then when it kind of, usually when you get stopped out like that, the market's going to reverse, but it didn't. It kind of went sideways again. That's one of our entry methods, sideways rectangle patterns. And when it broke out again, I would have been in at 53.60, and you can see it went all the way up to 10. So a lot of traders focus way too much on what's the winning percentage of your systems, and that's really a stupid question. Or I should say uninformed question by people that don't trade. They don't know how to trade. They don't know the mechanics of successful trading. But what's much more important than your winning percentage is making more pips than what you lose. If you lose 10 pips, 10 pips, 10 pips, you're down 30 pips, and then catch one 50 pip win, you're up 20 pips on the day, even though you're only right 25% of the time. So some days are easier than others. If you took all these trades right here, you got one win here, small win here, breakout right here, that would have had a small win, a loss, I'm sorry, not a loss, but actually, yeah, a loss. I wouldn't have taken this trade right here, a loss here, and then this last trade went up 50 pips. So if you add up all the pips, you have 2 or 3 6 to 10 pip losses, a 50 pip win here, maybe a 15 pip win here. This one you would have got out of half and broke even on another half, so it was only a 5 pip win. More than likely you made 30 or 40 pips, even though you had quite a 2 or 3 losses in a row there. So keep that in mind when you're trading. Now, the pound was strong on all time frames. So was in New Zealand. It was weak on all time frames. So this is another one that you could be looking to buy today. Now, this one's kind of going sideways. It broke out right here. You always draw your fibs and hope and anticipate that being hit. But when it doesn't and it goes sideways for a while, you got to get out of your trade. So that's a chance to make a few pips in that case, maybe 15 or 20. You always want to redraw your fibs on the new swing high. And this one, again, pulled back to the 50% level. I would have probably bought this breakout right here and put my stop underneath the 62%. And this is one of those things where it went sideways. A lot of times I get out of these trades with small 5-6 pip losses and then enter again. And you can see it didn't immediately break out. And this is one of those trades that really took a while to develop. You might have moved on to better pasture, greener pastures over time. 7 o'clock. You can see the yen was just incredibly strong. More than likely, you're looking at Australian yen sells later in the day. There's the Australian yen, and you can see this one is definitely going down, down, down. Every time you have a series of, in fact, I have this chart. This is one of the charts I leave running, so let's take a look at it. This is one of those things where you have the previous day's low. When it breaks out underneath there, you have a small, pretty much a break even. Probably 15 pip win here. You're short again right here when it can't get back above the previous day's high, somewhere around 55. You always want to draw your fibs on the last wave to get an idea of where your profit target is. And most of the time it doesn't go below the 1.618, which in this case happens to also be the 50-day moving average. So when it came down to the 1.382, the previous week's low, and kind of failed to really sell off under there, I would have probably exited here at 18, short at 55. So that's over a 30 pip win. And when it gets underneath the lower containment band, it's usually a riskier trade selling it. It's better. You're better off usually waiting for one of my overnight fib levels. I do the fibs analysis each night, spend 30 or 40 minutes so you don't have to. And when you see these fib levels underneath the lower containment bands, usually, that's where the market kind of runs out of steam at. One of the new tools I'm working on developing, and it should be available within a week or so, is the tool that measures the statistical intensity in a little bit different way. It measures not only the direction but the intensity and where in the support resistance each currency is. You can see the Australian here extremely weak on the daily trend, weekly trend, and monthly trend. So this is one of those currencies that you would have been looking to sell all day. Here's the yen, which you can see just incredibly strong all day. The weekly trend shifted up just mildly so, and the monthly trend was still pretty intensely down. The monthly trends take quite a bit longer to change direction. But the Australian was weak, and you can see looking to sell it all day, it fell, fell, fell. Let's look for some of the other ones today that showed some weakness. The euro at 5, incredible weakness there. And let me just also highlight our new tool that I'm again going to release soon. And it also shows a little bit after 5 the weakness coming in there. So selling the weak euro versus the strong yen also makes sense, especially after 4:30, 5 o'clock. This one, if you're actually watching the chart, broke down from above the previous month's high. That's a false breakout. Whenever you're above the previous month's high, week's high, day's high, and it fails to stay above there and breaks down, that's always a positive thing. Previous day's low is also right there, so you would have taken this trade here with a small 10-15 pip win. It pulled back up to this resistance area. Support level, once broken, becomes resistance. You might have shorted right there. Notice our intelligent trailing stop had you out of this at 30. If you're short here at 81, that's a 50 pip win. And it's okay to sell underneath the lower band as long as it's within 15 pips of it. Once it's 15 pips underneath there, I usually don't like to sell it. This would be basically the last short that I would personally take. And you can also use our range charts, which I'm going to bring up right now and show. This is a 6 pips per bar range chart, and it's just a phenomenal way of finding entries and exits. If you get a pullback here and you go short, you can see you lost 5 or 6 pips there, shorted here, maybe made about 8, shorted here at 55, you're out at 31 for a nice win. If you shorted again right here at 31, you made a nice profit, you made 20 pips. And typically, like I said, underneath the lower band, if it's too far underneath there, you're usually better off waiting for a pullback up to the lower white 2.0 containment band or higher. I like to have at least 15 to 25 pip pullback. This technically meets it here, but if you shorted here, obviously you lost, because it is underneath the lower band. But it's okay. If you short and lose 10 pips and you short it again and you ride it down 15 pips, and let's say you short here and lose 7 pips, you short again right here at 11 and you get out at 88, it's 20-something pips. There's nothing wrong with losing 10 pips or even 7 or 8 pips if the next trade gets you 22. It's at the end of the day, you add up all the pips you've made minus and subtract the pips you've lost, and that's your net profit on the day. So again, this is a Eurodollar 6 pips per bar chart.